Adam Button is Chief Currency Analyst at ForexLive. He joins us now with more. So, Adam, the Canadian dollar, would you normally expect it to be up more this year with the rise in oil prices?
Yeah, I mean, really everything has gone right for the Canadian dollar this year. If you look at oil, it's up 40%. Economic data in Canada has been super strong. Job growth, GDP's beat expectations, and equity sentiment has been broadly positive. And all those things are the kind of things you'd expect a big rally in. So we might be up 3%, but we fell 6% in Q4. And at this point, you look at it and you say, all right, it's had all the good news in the world and it can't rally. So what's going to make it go up? And the rule of thumb is that if something can't rally on good news, it's probably not going to rally at all, and it might just fall. So that's kind of what the market is looking at and feeling, and that's what's so frustrating about the loonie right now.
Yeah, because it is odd. You may have referred to this already, the massive recovery in local oil prices in Alberta, the evaporation of the discount. Is it this short Canada feeling that we are inevitably headed for some kind of housing problem?
Right, that's the feeling that there's this other shoe to drop in Canada, that there's no way the economic data, I mean, we just had the best 6-month period of job creation in 17 years. That's really reflective of the economy, that, you know, we're going to get some more data, it's going to be weaker, that housing just can't stay up at these levels. And like you said, there just isn't a theme to buy in Canada. I mean, this is a country that's a commodity producer, and 15 years ago you could come to Canada and it was a safe, stable country to get commodities from. Now you can't move things, you can't extract things. And if you want to bet on the consumer, well, it's tapped out, it's over indebted, so you need to dangle a carrot in front of the market if you want it to bite, and Canada just doesn't have anything that anyone wants right now.
Well, I mean, you say we can't export anything, but 3 million barrels of oil gets exported every day, and federal government just spent more than $4 billion to buy a pipeline. So, I mean, are you overstating the damage to Canada's reputation?
Yeah, perhaps a little bit, but at the same time, you know, the investors or the currency market is going to move on investment, and they're looking for the next thing, right? So a lot of this production in oil is investments that were made 15 years ago, 10 years ago, even 5 years ago. And they're looking now and saying, listen, we're not going to invest more in oil because we can't get out the oil that we have right now. Yes, though, there are catalysts out there. Once these pipelines are approved and built, once Canada has some sort of framework in place where you can extract resources without extreme costs of regulation and preparing reports and timelines, then there may be a catalyst there once again. But again, it's just not that believable right now. So what you're looking at is an economy that's growing 1% or 2%, and either way, you have this Canadian dollar that's basically stuck in a range saying, all right, it's an okay economy, but it's nothing exciting. And
just to go back, circle back to something you said at the top, if a security doesn't move on good news, such as the recovery in Alberta oil, that can bode well for sentiment. Bode ill for sentiment. I'm sorry,
exactly. And we've seen the same sort of thing with oil producers in Canada. Like, why aren't they going up when oil's gone up so much? And it makes you worry there's something else out there. But that also reflects the extreme negative sentiment for Canada and the skepticism about all the good news that's come out in this country in the last little while. And really, the other part of it is that the global economy isn't that strong. If you look at stock markets over the last 3 months, they've been wonderful. It's been one of the best starts to the year ever, but that's just about central bank easing. China stimulus and the Federal Reserve and Bank of Canada and others headed to the sidelines. Whereas if you look at the data, in the US it's been poor, in the Eurozone it's been poor, and global growth is being downgraded all the time. So we're in this short window where central banks can lift growth or can lift equities and sentiment, but they can't keep it going alone. So there needs to be some catalyst, and that's why Q1 earnings season is so worrisome.
Adam, we'll have to leave it there. Thank you very much indeed for joining us.